Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be looking at the percentage drawdown from the prior all-time high. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium, where you can access this chart as well as a ton of other charts at intothecryptoverse.com. Let's go ahead and jump in. So, measuring things from the prior all-time high can be somewhat useful when trying to identify how bad the current bear market is compared to, say, other bear markets that Bitcoin has previously experienced. Now, of course, we have to understand that economic conditions from one market cycle to another could obviously change, but it does at least provide some perspective on where we currently stand. Okay, so for instance, right now, Bitcoin sits down approximately 70% from the all time high. If you actually measure it to, say, the wicks or so, we ended up going down around 70, I think 74% or so from around $69,000, around 74% approximately. But so far today, we sit down around 70% because we're still sitting over $20,000, not sitting at the current low that we saw at around 17.5K. Now, the reason why it's interesting is because it can provide, again, some perspective on what we saw in prior bear markets. And during the last bear market that really finalized itself in late 2018, you can see that Bitcoin ultimately went down approximately 84%. Now, that's, of course, measured from the daily closes that we have stored in this chart. But if you go back to the cycle before that, it closed down around 85%. Now, measured from the wicks, it was actually closer to around 86 to 87% in that cycle. And then this first cycle ended up closing down, I believe, around 93 to 94%. 93% based on daily closes, I think, and then 94% or so if you measure it to the wicks. So I understand, of course, and like I imagine most everyone does, in terms of the economic conditions of today with high inflation, the Fed raising interest rates, and honestly just a stock market that, of course, is also in a macro downtrend right now, sort of begs the question, well, where is this bear market going to eventually take us? But even with all that, up until this point, we still haven't even gotten, below 75% to the downside yet. Now, of course, there's no guarantees that we're going to, but again, if history is any indication, there's at least some evidence to suggest that we could in fact go down a bit further. And if you actually look at 2018, you can see that we sort of paused at that 60 to 70% down for a little while before ultimately going all the way down. The same thing happened in 2014 as well, a little bit in 2011, but not so much. So right now, Bitcoin sits down around 70%. Now, one of the questions, a commonly asked question, because we've talked about diminishing returns, it's one of the theories that we've talked about on the channel for a long time, the idea that you will see diminishing returns from one market cycle to another. It begs the question, well, should you see diminishing losses from one cycle to another? And of course, all things being equal, in terms of how the economy looks, how the stock market's doing, then I think you would expect diminishing returns from one cycle to another, and in the same way that you would expect diminishing losses from one cycle to another. So you could argue that the first cycle saw us go down 94%, then after that it was around 86 to 87, then after that it was around 84%. So perhaps this bear market won't be quite as bad. Of course, that's also assuming that everything else is the same. Now, we have to consider inflation. We do know that historical bear markets that the S&P 500 experienced during these periods of high inflation that we saw in the 40s and the 70s, they didn't actually, the S&P didn't actually bottom on that first spike up in the 40s and the 70s until inflation peaked. Okay, so with that in mind, I do think it continues to make a lot of sense to continue to focus on inflation and see where we're actually going to start coming back down, because until we do start to come back down, I imagine the Fed has no interest in pivoting. So with all that in mind, again, Bitcoin sits down approximately 70% from the prior all-time high. And it's a fairly nice move to the downside in a relatively short period of time. And one of the reasons I say that is because, yes, the last bear market did eventually get us closer down to around 84%. One of the interesting things, though, is that we've gone down quicker in this bear market compared to the last one, especially if you take 69K as the top and not the other, the more technical top of say 64K, where everything else peaked, right? Like the RSI, a lot of on-chain metrics peaked back in early 2021, and and also some other macro price metrics as well. Even like say things like the pi cycle top. Right? These are all things that topped earlier on in 2021. But if you just take say the if you take this move, let me actually measure this the right amount. But if you take sort of this move and overlay it with where we are today, you can see that this bear market has actually taken us down quicker than the last bear market did in 2018. We're still sort of at the same level within a few percent, but this wick here would have been equivalent to where we were in say 2018. We wouldn't have seen this price in 2018 as measured from the all-time high until this October if we were just comparing the same exact thing in terms of timeline. Okay, so with that in mind, some people have said before that this bear market feels different than the last one, and I think there are some elements of truth to that. During the last bear market, we spent a long time just sort of flirting with that 6K level. And while all these moves to the downside, they certainly stung a little, they weren't really quite so bad because we just kept bouncing off the same level. And this went on for the better part of, like almost a year, really. From where we kept finding support. And then finally, the floor fell out. But the thing is like we were so used to 6K being this local bottom. By the time this move occurred, it was sort of like over once it started. It was like over basically once it started, right? We broke through. We just had a few weeks down, and then we were back off to the races again. And then of course we had this sort of mini bear market over here before the actual macro bull came. But regardless, this bear market was a bit more tame to some degree than the one that we're currently experiencing because of just how far down we've gone in a relatively short period of time. But again, if you compare prior moves to the downside, you can see that prior bear markets have gone, further than 74%. So far, this one's down around 74% to the bottom. And if you were to continue going down, an 80% drop would get you to around $14,000 or maybe even slightly. Let me measure this more exact. Just below $14,000 if in fact we were to go down 80% from the prior all-time high. So these are just things to consider. I did think that at least this visualization would help you kind of realize where we sit. And furthermore, to also recognize that wherever the bottom is, you do tend to spend some time there. It's not like you don't typically just see like a V-shaped recovery coming off of a macro bottom for Bitcoin. You didn't see it here in 2019. You also didn't really see it in 2015. We spent some time there, just like we did in 2018. And I know we only spent a few months in this range, but then we actually did get one more chance to buy at that price, approximately, at 3.8K back in March of 2020. So, I know there's a lot of angst in the market, but remember, whenever Bitcoin does bottom, you will likely have a longer period of time to accumulate than just like a day, right? So just something to keep in mind. Again, if you guys like the content, remember to subscribe. You can access this chart as well as a lot of other charts, including on-chain charts, social statistics, logarithmic regression charts, ROI charts, etc. Check it out, intothecryptoverse.com. Thank you guys for tuning in. Give the video a thumbs up, and I'll see you next time. Bye.